Hey, what's up guys? John here. The CEO of Apple, Tim Cook, just offloaded $88 million worth of stock this morning.
Tim Cook has sold $41.5 million worth of Apple shares, marking his largest share sale in the past 2 years. Cook sold 511,000 shares previously valued at approximately $87.8 million.
Alongside several other executives at Apple, Warren Buffett sold $13 billion worth of stock as well. A lot of very, very smart, wealthy, and powerful people are offloading shares. A lot of Walmart heirs, a lot of other executives, Salesforce, you name it, all the big companies, they're selling stock. What I think is going to happen next is going to be shocking. I'm going to break it down for you with verifiable facts. Please hit the like button. YouTube will share this content to educate other people about what's really going on. And today's video is sponsored by Patriot Gold Group, but more on that in just a little bit. Take a look at this. Apple CEO Tim Cook offloads 88 million of shares, his biggest sell-off in years. Biggest sell-off in years. And alongside, you had executives DeAndre O'Brien and Catherine Adams sold $11 million apiece. $11 million apiece. And Warren Buffett, he sells $8 billion worth of stock, but the total sold was $13 billion. So he reinvested 5 of the $13 billion into distressed companies. So you look at what these wealthy people are doing, they're changing their strategy. They're looking at the writing on the wall. The writing on the wall is looking like big problems for the American middle class and big opportunity for the wealthy and powerful as they accumulate more and more wealth, more dollars, more cash reserves to get ready to go out there and invest in this world of distress that's going to be coming to the economy. Ray Dalio, he came out and said that he believes that we're going to start to see a 3-day work week all because of AI. So if you look at Warren Buffett, you look at Apple, how many people are going to be spending $1,500 on a cell phone, on an Apple cell phone in 2025? Probably not as many as today. I actually went to Apple here in South Florida, and I was getting an iPad fixed. And I spoke to the lady at the front desk. She said she just checked somebody out on the new iPhone 15 and used 5 separate credit cards to be able to make that transaction work. 5 cards. They're putting $50 here, $200 here, 5 cards to get that deal to work. She says it happens all the time. Right now, consumers are having a hard time. That's coming from somebody that works at Apple, that's dealing with sales. So imagine somebody like Tim Cook, someone at the top. They know the numbers. They know what's happening to the economy. They get the information, data, and knowledge before the mainstream. And when you look at what they're doing, they're selling. When you look at what the wealthy are doing, they're selling. And there's a reason for it, because consumers are in very big trouble. The U.S. debt crisis could ignite a long-term rally in gold. Since March of 2020, we've added $8 trillion in debt, and gold is up a whopping 50%. Now with the Fed raising rates, our interest payments alone are over $1 trillion annually. The BRICS nations met last month, and Saudi Arabia and the UAE joined Russia, China, and India. And another credit rating agency, S&P, has downgraded multiple U.S. regional banks on liquidity worries. 51% of Americans cannot pay their credit card bills, which just surpassed $1 trillion for the first time in history. If this is Bidenomics, increased spending and regulation means it's only going to get worse. Buying gold and silver is the most trusted strategy when you do not trust elected officials in office in Washington, D.C. having your best interest at heart. Call the proud Americans at the Patriot Gold Group today before it's too late. Mention @This is John Williams and you'll always get the best in-class service by Patriots for Patriots. Patriot Gold Group has a no-fee-for-life IRA, where your IRA or 401k can be in physical gold and silver. And you may be eligible for a no-fee-for-life IRA on qualifying rollovers. Call 888-341-2896 for a free investor's guide today. Patriot Gold Group is a Consumer Affairs top-rated IRA gold dealer 7 years in a row. Call 888-341-2896. The Fed is going to continue. The Fed governor says further interest rate hikes likely needed to fight inflation. Now, when you look at 2008, during the great financial crisis, the average interest rate on a credit card was 12%. Now it's 28.05%. Everything is much more expensive. And as the Fed continues to increase interest rates, it's not affecting her. You can see, she's probably living in some nice mansion. She's not worrying at all about next month's bills. When you look at what they're doing with interest rates, how this is going to impact everyone, small business, mortgage business, real estate, it's going to impact everybody. And they're going to continue to increase rates. And what I think is going to ultimately happen, it's going to push us into a deep recession. Who knows what's going to happen to the dollar? Who knows what's going to happen to the banking system? We saw regional banks, Silicon Valley Bank, Signature Bank, First Republic, Credit Suisse, PacWest got acquired by Bank of California. Yet all of these situations happening, every time they increase interest rates, they instigate further problems in the banking sector. That's what's happening right now. Mortgage rates, just for context, on a 30-year fixed, 8.625% if you have a 700 to 719 credit score. So for context, the average credit score in America is a 698. So if you have a credit score that is slightly above the average, it's 8.625%. So if you have the average credit score, you're 8.643%. So right now, you're seeing more mortgage applications are being rejected for insufficient income. Well, of course, who could afford this? If you're looking at a $500,000 home and you put 6% down, which is the average down payment for a first-time home buyer, your monthly payment on this property with an 8.6% mortgage rate is $5,196. That is based on having a very, very low insurance cost, $100 a month. Many markets are double, triple, quadruple that. So if you were to just put in, let's say, where we are in Florida, you're $4,000 at minimum, right? Probably more, depending on whereabouts, specifically in Florida, $5,400 a month. But most are at least $2,000, $4,000, $5,000. You're over $5,000 a month on a $500,000 home. If you are looking at the average home in America, which is a $410,000 purchase, you're still over $4,000 a month. So of course, mortgage applications are going to continue to get rejected. The unfortunate situation is the Fed is going to continue to increase interest rates. For the mortgage market, this is a very, very big problem. You could see, they were even discussing this, a federal funds rate of 7%, meaning mortgage rates could be 9.5% to 10%. If this happens at a 9% mortgage rate, who is going to be able to afford these properties? Nobody. But the real catastrophe is going to be, as the labor market changes, who's going to be able to get debt, be able to refinance their property, get a line of credit on their property to be able to weather the storm? Not many people. They're not going to be able to afford these interest rates. As this is continuing to happen, you're looking at other situations like this corporate debt wall that's going to spark in 2024. So this is why I think what Ray Dalio is saying, and Jamie Dimon, he said the same exact thing. He said people are going to go to a 3.5-day work week. Ray Dalio said a 3-day work week. Why are they all saying this? Because they know that AI and technology is going to have a massive, massive disruptive impact on the labor market. And this is going to be, I think, what's going to spark it all off. This $2 trillion corporate debt wall that's going to spark job losses in 2024. This is from Goldman Sachs. They're saying that, we're going to see about $5,000 worth of jobs being lost every single month, and it's going to double to $10,000 jobs every single month. But this does not take into consideration interest rates and consumer spending. This doesn't take into consideration anything else. This is only the corporate debt wall. So what I think is going to likely happen is we are going to see a situation over the next year to 2 years in which the labor market is going to go into a massive shock. And we're going to see a situation where stocks are going to really likely take a big beating. We're going to see a lot of change in the real estate market. Right now, there's this big concept around there's a housing shortage. There's more of a shortage of buyers than there are of sellers right now. Not many people can go out there and afford to buy. And as this market gets more and more challenging, there's going to be a smaller pool of buyers, and there's going to be many more sellers as the labor market continues to contract. So I think we're walking into a massive, massive wealth transfer in the real estate market and the labor market. I think we're going to see so much chaos happen. And you can see it through Warren Buffett, through Tim Cook. Even the CEO of Microsoft offloaded over half of his entire stake in Microsoft. Satya Nadella, over half of his entire stake in Microsoft liquidated, right? So you're starting to see all these wealthy people selling. And when have you ever seen in history a lot of wealthy people selling and the general public buying, or the general public, being optimistic, it working out well for the general public? Never. You always follow the smart money. You follow deep pockets. Look at what they're doing. Pay attention to what they're doing. They're selling right now, and I think for good reason. What do you think about this entire situation? Do you think we're walking into a scenario over the next 12 months where, here's how I think it's going to happen. We're going to see a lot of defaults over the next 90 days. Credit card bills, student loan bills, auto loan payments, people falling behind on rent, mortgage payments, things like that. As people start traveling and spending more for the holiday season, then people are going to start to have to try to make it good on those bills after the holidays. Not many people are going to be able to do it. And so more and more people are going to start pulling back on spending. As that begins to happen and it starts to register how many people are 30, 60, 90 days behind on their bills, banks are going to continue tightening up on these consumer loans, these consumer loan products. So people are going to have less access to liquidity. They're going to spend less in the economy. They're going to start defaulting more. They're going to start being forced to sell off assets. And the wealthy people that have money, that have access to money, that have good credit, that are put in a really strong position, are going to be able to go out there and acquire assets. But the big question is, what is this going to mean for the banking system as the Fed continues to increase interest rates? We're going to start seeing more regional banks. We're going to start seeing a lot of these smaller institutions fall, I believe, in a dramatic fashion, much worse than what we saw 6 months ago in March with Silicon Valley Bank and all these other situations that unfolded. We're walking into a situation where a lot of the cash is going to get pulled out of these banks for mere survival, because they're going to need it to make good on these new interest rate increases that are going to be happening across all these different loans. We're walking into some uncertain times. What do you think about this entire situation? Drop below, hit the like button. And for more information on Patriot Gold Group, you can find it below in the description of this video. And I'll catch you guys in the next one.